The National Union of Metal Workers of South Africa has inked an above-inflation wage deal in the motor industry. Members will receive a 6% increase in the first year, 5% in the second year, and another 5% in the final year of the agreement. Inflation is currently hovering around 3%. The wage deal is set to benefit more than 300,000 workers falling under the Motor Industries Bargaining Council. Sasol is back in the black. The petrochemical firm has posted basic annual earnings per share of 10.60 rand. That's from a loss per share of close to 70 rand previously. The swing is as a result of higher chemicals prices, tighter cost controls and lower asset write-downs. Sasol also benefited from a 4.3 billion rand payout from Transnet after it claimed in a legal suit that the state-owned logistics firm had overcharged for oil transportation over several years. Despite the improvement, the company has once again decided to skip dividend payments, as its net debt remains above the $3 billion cap it stipulated in its dividend policy. The sluggish economy is weighing on Italtile. The tile and bathroom retailer has posted a meager 2% rise in full-year headline earnings per share. The firm says that while customers are still drawn to the group's brands, shoppers are buying smaller baskets as disposable income remains under pressure. Nevertheless, a final dividend of 22 cents per share has been declared. This takes the total for the year to 50 cents. Italtile has also declared a special dividend of 98 cents per share. The company says this is due to its strong cash generation and cash reserves in excess of operational requirements. Looking ahead, the group has warned that weak economic growth, cheap imports and tariffs in neighboring markets will keep pressure on margins. To deal with this, Italtile plans to intensify cost control and efficiency while reviewing non-core assets. Advotech continues to go from strength to strength. The private education group has recorded growth in revenue, enrollment and profit during its first half. In the 6 months to end June, revenue rose 10%. That's thanks largely to gains at its South African operation. Although its Rest of Africa division shot the lights out, with revenue jumping 31% during the period. Meanwhile, enrollments across the group had ticked up 13% and headline earnings per share increased 15%. Based on the performance, Advotech has declared an interim dividend of 45 cents per share. That's up 18% from the prior period's payout. Hulamin has suffered a major profit knock. The aluminium group has posted an 81% dive in interim headline earnings per share. That's partly due to a stronger exchange rate, elevated inflationary energy costs, and increased pricing pressure in the local can end market. The firm says its immediate priority is to maintain a competitive cost base while reducing its net debt levels. Momentum expects to report higher full-year earnings as most of its business units contributed to a solid operational performance. Headline earnings per share are projected to be between 45% and 55% higher. The financial services provider will open its books on the 17th of September. Italtile expects to report higher full-year earnings as it continues to generate strong positive cash flows. Headline earnings per share are forecast to be between 39% and 59% higher, while earnings per share are projected to rise by as much as 149%. That's due to the effect of a one-off recognition of a bargain purchase gain of 403 million rand, arising from the fair value measurement at the date of acquisition of One Life. Italtile will release results on the 5th of September. Fairvest is looking to raise 400 million rand through the issue of new B shares. Java Capital has been selected as book runner for the capital raise. The book build is now open, and the company says it reserves the right to close it at any time. And Airports Company SA, known as AXA, has reported a robust set of annual financial results. For the year to end March, net profit more than doubled to 1.1 billion rand. That's as the firm capitalized on rebounding air traffic, higher tariffs, and improved trading conditions. Management also cited the group's innovative grow and sustain strategy. Further afield, Keurig Dr. Pepper is acquiring Dutch coffee company JDE Peet's in an all-cash deal worth approximately $17.4 billion, with the acquired company valued at 15.7 billion euros. Here's more detail in this report.
The firm behind Dr. Pepper drinks is set to buy Dutch coffee company JDE Peet's. The deal is valued at just over $18 billion. JDE Peet's, known for Peet's coffee and international brands like Law and Dow Egbert, is currently valued at about $15 billion. Keurig Dr. Pepper is worth more than 3 times that figure. After combining, the two firms say they will separate the coffee and beverage units. JDE Peet's lifted its annual forecasts last month after beating expectations for half-yearly results. That's thanks to sales growth that defied already high coffee prices. They've jumped after volatile weather took a toll on Arabica and Robusta bean production. The Dutch firm has also warned that US coffee prices could jump this year as a result of Donald Trump's 50% levy on beans imported from Brazil. Keurig has warned that its coffee segment will see subdued performance for the rest of the year as a result of such factors. The firm last year bought a 60% stake in energy drink maker Ghost for almost $1 billion. It plans to purchase the rest in 2028 as part of moves to enhance its portfolio of drinks. Shares in JDE Peet's jumped around 18% in early Amsterdam trade on Monday, on track for their best day on record.
And Ukrainian President Volodymyr Zelensky said Kyiv aims to secure at least $1 billion monthly from allies to purchase U.S. weapons through NATO's Pearl program. Let's take a look.
Kyiv is seeking to secure at least $1 billion monthly from allies to purchase U.S. weapons. It's through NATO's Pearl program, where members of the alliance buy weapons from the US for Ukraine. Ukrainian President Volodymyr Zelensky spoke alongside Norwegian Prime Minister Jonas Gahr Store in Kyiv. Zelensky praised Norway's decision to join the initiative and highlighted its role in supporting Ukraine's energy security amid Russian attacks. Norway has joined the Pearl program, which allows you to buy weapons in the United States, he said. Our goal is to fill this program with at least $1 billion per month.
Together with the UK,
Store reaffirmed support for Ukraine's air defence and maritime capabilities. He added that Norway would prefer having a peace agreement with Russia prior to contributing to Western security guarantees for Kyiv. Zelensky said he would meet with US Special Envoy Keith Kellogg later on Monday to discuss preparations for a possible future meeting with Russian President Vladimir Putin.